All right, Bulls and Bears, we've got a major economic warning coming out of the IMF. That's the International Monetary Fund. We're going to get into that here in a little bit. Also, what's happening with the stock market? It went back up today because of some words that were spoken by someone. We're going to talk about what words were spoken and who spoke those words. Also, a lot of other bad news as far as the direction of the consumer and most people. Now, this doesn't mean that the top 10% are doing bad, but most people, if you look at the 70% plus that are living paycheck to paycheck, things just got a lot worse, and they're about ready to get even worse in the coming months. We're going to get into that and more. Let's go ahead and get started right here. And we have another study coming out telling us how bad U.S. consumers are doing. Consumers are struggling with their credit card balances. This is according to Marketplace. Late card payments and minimum payments are at a record high, folks. You read it correctly. Late card payments and minimum payments are at a record high. So one, people are paying their payments late. Two, they're not even making the minimum payments here. That's out of the Philadelphia Fed. So tell me how good the economy is actually doing when you see this type of thing. A record high, folks. A record high. Minimum credit card payments not being made and late payments, right? So go factor that into your decisions on, do you want to invest further into these markets? Now, some people would argue that the stock market is completely detached from the average working person or the U.S. consumer, and I would agree. But when you see struggles happening amongst the consumers, companies do brace for lower earnings, because then companies are thinking and bracing for less spending out of the consumer. And of course, companies want consumers to spend more and go more into debt. So when you see volatility and uncertainty, then that's when you see the stock market selling off like we're seeing now. But today something happened that brought the markets up a little bit. Let's talk about that. And we got into this a little bit yesterday, where the president came out basically threatening and criticizing central bank head Jerome Powell. And what he said was rates should be dropped, which I completely disagree with. That's a terrible idea. But nonetheless, he came out and said it, and today he kind of reversed course, I think, once he saw what was happening with the stock market. Now Trump said no intention of firing the Fed chair Powell. And of course, the market's like that. We see the Dow Jones was up 2.6%, S&P 500 up about 2.5%, NASDAQ up 2.7%, also Russell 2000 up about 2.7%. So it's interesting that words one day and then the next day that are completely opposite have such a big impact on the market, right? So if it were me, I wouldn't even be investing too heavily into these markets, because you don't know what words are going to be spoken tomorrow, next week, next month, right? There could be words that come out that tank the markets. There could be words that come out that shoot the markets up. So unless you know what's going to be said, and we're talking about the words that are said, then I would be very cautious right now, because this is just insane how much just talk and words are moving the markets right now. But when it comes to inflation, the cost of living, and price levels of everything from cars to food to homes, you name it, going higher, well, there's more inflationary forces out there than ever before. We still have easy money policies. That's still happening, not changing out of the banks. And now we have tariffs add on top of that. Interest rates rising. We see what's happening with the 10-year yield going up again here recently. So that's going to make mortgage rates go back up. Typically, higher rates would be deflationary, because that means people can borrow less money. But in this case, if the easy money is still flowing, banks are still loaning out money, still lending, you're not going to see this have an effect on prices. It just means people are going to have to carry more and more debt, right? So when is the implosion point of the U.S. consumer? Well, we've already passed that. But what we've seen here over the past few years is never-ending rescue programs to prevent market downturns, to prevent price levels from coming down, to keep the bubbles inflated, right? And now we have even more here. Look at the warning out of the IMF, what they're saying. Basically, they're saying to prepare for major negative shock because of the tariffs. Now, we've already seen over the past 3 months now with this current administration that things didn't play out like we were told. And it doesn't mean things won't change in the next few months. Maybe things will reverse course. Maybe price levels will come down. The cost of living will come down. So far, the cost of living has went up higher. So we haven't seen happen what we were told was going to happen. No surprise to anybody, because we said even before they took office that this was going to be the case, that inflation was just going to get worse, that the cost of living was going to continue to rise. Now, the IMF has came out and they're forecasting nearly every major economy being hit, with the UK expected to grow by just 1.1% this year, down from 1.6% from January. They also predicted sharper deterioration for the US, down from 2.7% to 1.8%. And that's basically consumer spending, which is looked at as economic growth. 1.8% still means people are going to be spending money, just not as much as had previously been expected or anticipated. Now, what does that mean? Less spending would mean more job losses, more layoffs. The less spending, the less jobs are needed, the less people are needed on the other side of the transaction. The more spending, in other words, if people can get more loans or borrow more, then you're going to see more jobs. So we're still seeing the banks have this easy money policy. So it's not going to be a collapse. It's not going to be a crash. And even IMF is saying they're not going to be, it's not going to be negative. They're still saying it's going to be growth, just not as much as previously expected. So it's not a end of the world type of situation, right? What is the end of the world situation? There isn't one unless we see nukes flying. But financially, it is good to know this information to be prepared. Now, speaking of being prepared, millions of people weren't prepared for the cost of living and are not able to pay back their loans. Look at this. More than 5 million student loan borrowers are in default right now. The education department came out and said that, and they're going to be referred now to debt collection, right? They've taken away the safety net. It was a few things in place for these borrowers and these people that are in debt, not able to make their payments. One thing was they didn't report it previously to the credit bureaus. That's going to be changing. And they weren't referred for debt collection. That's going to be changing. So now millions of people, over 5 million, are going to have their credit scores pummeled and their credit dinged because of referral to collection. So it's going to be very difficult for these people to get a loan. If it wasn't already difficult enough for people to buy a home, now renting an apartment, getting a loan, especially a mortgage, is going to be even more difficult. And what that's going to mean? That's going to mean more negatives in the housing market. Now, what's happening with the housing market? Prices aren't crashing. We still have some buyers out there. We have a lot of people refusing to sell because they're locked in at such a low rate. And renting, which is the alternative typically to owning, unless you want to be homeless, renting is not that much more affordable than owning a home in much of the country. So people are just choosing to stick with their homes and continue to make their mortgage payment versus renting, because renting you're not going to be saving that much because rents are so high right now. So it's a big mess. It's a big freeze up right now in the housing market. Now, one area, in this case a whole state, where people are more desperate to sell than usual is Florida. And Florida condo owners are desperate to sell because of insurance increases. What do we talk about here on this channel? I said the cost of carrying a home is going to get much, much more severe, especially in these states with all these disasters. People can't afford their insurance. People can't afford their HOA. And of course, they can't afford just the repairs of upkeep of a home. And air conditioning goes out, you're talking $5,000 to $10,000, maybe more. A new roof, you're talking, depending on the area and the size of the home, $20,000 to $40,000 in some cases. It's insane, folks. Special assessments also are limiting financing options and have elevated costs beyond what people can bear in Florida and many other states, but Florida is where it's more noticeable. And people living in homes that are connected, townhomes, condos, apartments, etc., they're seeing a double whammy because they're getting their insurance raised for their unit, but then also raised because of the exterior insurance, which is typically carried by the homeowners association. So they're getting a double whammy, so to speak, with rising insurance costs from both sides, from the HOA and for their individual condo or unit. And this is especially noticeable in Miami, where it's being described here. This is how Newsweek put it. The market is suffering a breathtaking collapse in demand. I wouldn't say it's breathtaking because I think this was expected. If you've been following this, I mean, we all expected this to happen in Florida. The Miami housing market, though, had the boom over the past few years, but now it's reversing. According to Redfin, almost 18% of pending home sales in Miami fell through in the month of March, and that's typically when the buying season starts ramping up and things start heating up. And instead of heating up, we have a lot of people backing out of their purchases. Now, when you look at home purchase cancellations nationwide, it's not as bad as Florida. Florida is the worst. But even nationwide, 13.4% of homes, that's out of Redfin. Roughly 52,000 purchase agreements were canceled in March. That's about 13%, 13.4% of all homes, right? So we are seeing people get cold feet and concerned about the cost of owning these homes with insurance and everything else happening right now. All right, but back to Florida for a second here. It's so bad now in Florida. Florida homeowners are in crisis, is what they're saying here out of Realtor. In crisis, lawmakers want to offer tax relief as a solution. So they're trying to soften the blow here down in Florida with tax relief for these people. Right, but also some of the people backing out are just looking at the disasters that have happened. I mean, look at this picture right here. Would you want to be in one of these condos here, right on the water, one of these townhomes when hurricane level winds or maybe even a hurricane comes through? Look at that. That would be very frightening. You wouldn't have to worry about the floodwaters unless the whole building came down, but I wouldn't want to be in one of these, especially in Florida. All right. Also, some other things are changing as far as how debt is being reported to the credit bureaus, which could have a negative impact on credit scores and the ability for people to borrow money. Look at this. Affirm, which they do financing on different types of online transactions, mattresses and things like that. Many different places you go to Affirm to finance something online. Buy now, pay later is also what we're calling it. Affirm to report all pay over time loans to TransUnion. It was previously the fact that most of these buy now, pay later programs and this creative financing wasn't reported to the credit bureaus. So the debt levels and the impact to credit scores were not affecting people, but now they are going to affect people. So add that on top of all the millions, over 5 million student loans now going to be reported and out for collections and negative impact on their credit scores. You're about ready to see a huge drop off in people's ability, I think, to borrow money, unless we see more loosening of the lending and more easy money, which would be insane. But we've already seen this insanity happen for years. Why wouldn't it continue, and why wouldn't they find new ways to keep this whole bubble economy propped up, right? All right, people, let's move on to some job cut and more layoff details here. We have the FDIC coming out and looking to reduce their workforce by over 1,200 people. I was shocked that even 1,200 people are at the FDIC because it seems like there's a lot of waste there. Do you really need that many people at the FDIC who basically they're insolvent? They have about 1% of what they need to cover all the loans and deposits, not the loans, but the deposits at banks right now. So we saw what happened in 2023 with those bank failures. The FDIC didn't have the money, so they basically had to come in and print the money. They had to come in with the Fed and the Treasury to be able to cover all those depositors at some of those banks that failed, like Silicon Valley Bank is one. So the FDIC not even able to cover most deposits, and they employed this many people. I mean, I'd say that's a good place to start cutting, but we'll see what happens. That could cause a loss in confidence because people view the FDIC as the safety net for their deposits, even though it's really not. But that's how people look at it, right? So in this case, perception is reality. Could it cause a loss in confidence? This many people getting cut from the FDIC. We'll have to see how this plays out. Also, we have some retailers out there very concerned about the rising cost and the higher tariffs that they're having to pay, and they're actually meeting here with the president here. Walmart and Target executives specifically met with the president regarding tariff fears. So what's going to be said? Will that be televised, or will that be accessible for people to see what was discussed between these entities? We'll have to see how this plays out, folks, and maybe we'll get some news that the tariffs are being halted or paused or even reversed. Again, it's day to day. That's why I'm maintaining being cautious here as far as investing right now. If I would invest, though, it would be more to the downside and shorting these markets and going with put options and things like that. But even that's risky because if certain words are spoken, the whole market could go back up, which to me is just insane, folks. This whole environment right now, as far as safely investing and knowing which direction things are going to go, it's the most insane I've ever seen it. All right, people, some other data here that came out that bothers me. It disturbs me a little bit. Something just got a lot worse. We've talked here about probably, well, many times, probably hundreds of times, about how people are so dependent here in the U.S., so dependent on medication. We've used the term half the people are on some sort of medication or prescription. In this case, it just got worse, folks. More than 60% now of adults admit they're taking some sort of pharmaceutical drug. That's another survey that just came out here. Americans watch more television than anyone else in the world, and we watch television as we're consistently bombarded by commercials for these things. And now 60% of people, they see these commercials and they think their life's going to be great. We see the commercial and somebody's tiptoeing through a field of flowers and they think that's going to be the solution to all their problems. But in actuality, it could end up being a lot more like this right here with this guy laying in a pool of pills, it looks like. All right, before we wrap up here, folks, a couple other things to be aware about here, to be aware of. And this big recall, 400,000 portable power banks recalled. I just bought one of these a few months ago. Well, not this brand, but a portable power bank. So if you have one by this company, let me tell you the name of it. New York-based tech company Casely recalled more than 400,000 wireless portable power banks due to a fire hazard. So there goes made in America for you. If they are made in America, it could be a lot of the items or components are made overseas, and then they just finish it up here, package it up, and they say it's made in America when it's really not. And speaking of made in America, I guess I'll try to sprinkle in some good news here. If you consider this good news, out of Retail Dive here. Men's Warehouse expands Made in USA program. A collection of clothing was designed in partnership with Joseph Abowd and produced in the company's Massachusetts factory. Well, here's the thing. Most people don't want to work in a factory. And most of the people that did want to work in a factory, they're being sent out of the country. So we're going to see how this plays out, folks. This could be an absolute calamity, or it could be the grass is greener on the other side situation. I've said here many times, I think it's going to get much worse before it gets better. So factor all this into your decisions on how you're going to play this, how you're going to invest, or maybe you're just sitting back with your popcorn watching all this play out. Maybe you're in a very good spot. I hope you are. Either way, thanks for being here. Thanks for checking out this news report. And those that are subscribed, thank you very much. Those that aren't subscribed, please consider subscribing. It really helps out the channel. Button right down here. And leave a comment and let me know what you think about this. What else would you like me to cover on this channel? I'm here for you. I do this channel because of the feedback that I've gotten. Some people have done very well on the investments we've talked about. People thanking me for the market forecasts, and I really try not to do forecasts. I really just try to look at what's happened already and what's happening, and try to just brace for the impact down the road. I guess you can call that a forecast, but I'm not making any guarantees, but I can guarantee you this. We're going to be on top of the news here for you. Please come back for more, and we'll talk to everybody very soon. As always, keep stacking. Bye for now. Peace.